Welcome everybody to Investing in the Minefield, where we discuss everything to do with bullion, miners, crypto, and macro. And as always, my special guest, it's Eric. How are you?
I'm great, Roger. Good to see you, man.
Great. And as always, at the beginning, I'm going to say, obviously, this is for entertainment, engagement, and educational purposes. Please do your own research, know your own limits, your risk limits, and why you're investing, and then invest accordingly. So, again, here we are, and gold keeps on going. It's had a tiny little bit of a pullback, but we touched 2,400. So that's 20% from, well, I think it was 1987 is where it was on the 14th of February, and we touched 2,400. So that's a pretty good result from any asset, never mind good old boring gold.
Yeah, and the funny thing is, anybody who watches any of the videos that you and I have been doing since Q4 last year, the focus was on a monthly close above 2,100, but we also pointed out that we had 3 monthly closes subtly at all-time highs. So I was trying to be cautious, but underneath, I think it came through that it's very likely about to be game time in gold. And then when you look at that actual breakout, my inclination has been and still is 2,400 is a big move in 20% in just less than 60 days. That's a very big move for any asset class, especially as big as gold is. But it's also predictable. From what I've been saying and what I still think, this is such a big breakout that 2,700 is a very much so a conservative target on where this breakout leads us, not in 60 days. I mean, we may need to cool off here a little bit, but this year, we're talking about an asset that when you look back on any of these big breakouts in gold is boring. It kills you. It's range bound. People, get disappointed. But the reality is that gold does act this way. And so once it goes, it starts to boogie, and it's just kind of started. I don't know where we're going to see some sort of a real cyclical cap. My guess is somewhere around 3,000, 3,200, 3,000, 2,800. That's where we're likely going in the next 9 to 18 months. So, there's still a lot of room on the upside for gold. It's playing catch up in terms of, its role of being a real store of value, since looking back to when they cut this off of the link to the dollar in the early 70s is typically how I keep track of it. But the breakout has been powerful, and it is now we're seeing S&P and everything else sort of roll over a little bit. We'll see if that's a temporary correction, but gold is a haven, and gold is a place where people should have some assets. I hope it pulls back in dollar terms one more time, to try to give people a chance instead of just going straight up. But that's the issue now, not is gold going to 1,500. That's not happening.
Yeah. What was interesting is that, as you were pointing out from November of last year, when we had that close above the previous 2050 highs that we'd had 3 times before, it was this sort of stealth. It was new all-time highs by stealth, but nobody cared. Nobody cared because it didn't, as you said, it didn't break 2,100, which is what you wanted to see. And then suddenly, bang. But what I think is interesting is that, and this is what I'd love to kind of get your view on, is it feels like this is very different because I was revisiting the old chart of the 10-year real yield inverted versus gold and looking at that massive alligator jaws over the last 2 years, really since the Russian invasion of Ukraine and everyone went weaponizing the dollar, we're going to move into gold. But also just seeing, you've probably seen them on Twitter, the massive decline in the top 3 physical gold ETF holdings at the same time. So we've seen this kind of, as you say, it's been unloved. It's been a massive move, but at the same time, ETF holdings are declining. It feels like this move in gold, because that relationship's broken down, because it's still a fairly unloved move despite its size, people haven't really got on board yet.
No way. People look at the people that watch our videos and the comments. You go through some of these where we focus on gold. I'll say it. These guys are idiots. they're thinking in terms of decades past, and maybe they know that gold plods along. And when we start to focus on the miners, we're coming out of a 3.5 year destructive bear market in the mining stocks. And it is true that area, when you look over long periods of time, they can get destroyed. It's kind of like crypto destruction in slow motion, but then crypto quickness in terms of a rally that lasts only half as long as the crypto altcoins. And that's what happens in the mining stocks. But it doesn't mean that you can't make a fortune when you get it right in terms of some of the metal prices being at real premiums, to where a lot of, look at the top end of the corporations that are producing gold or silver. Look at their earnings going forward. You want to be on board in the sense that the tightening of the belts through all these really tough markets has caused, even already, a $100-$200 move in gold goes straight to the bottom line, Roger. So those are real improvements in economics. So if you still believe in PEs and you still believe in cash flow being important and multiples which in the business cycle, I think you've got to take a peek at some of these companies, because from a relative stance of how they've traded in the past and any other sector, I mean, I just look at it like, you're not going to get me to buy NVIDIA here. I'm sorry. I need NVIDIA to have a real crack to even consider thinking about it. It's like, I've got other exposure in that area where you're looking at some sort of an ancillary adjunct to AI growth. No problem. I'm there. I'm not avoiding it. I'm not one of the guys who's stuck as a gold bug. Not happening. But, when you look for value, the mining stocks, particularly gold and silver, don't even worry about the other ones that I think have really interesting supply-demand dynamics over the next few years: nickel, copper, vanadium, etc. But just look at the gold and silver miners. They're going to be printing cash going forward. So
some of the sort of blue chip end of the gold miners have actually been performing pretty well. Because you look at McEwen Mining, obviously it's come off that big move down, just like everything else, but it's had percentage terms a better move than the junior gold miners, for instance. But also what I thought was interesting is it feels like some of those silver miners are kind of getting quite a nice bid as well.
I've been focused in the last several weeks exactly on that, which is which silver miners do I need to boost my portfolio in? Because from a gold to silver miner perspective, I'm much heavier in gold, but I've been feverishly adding it started, all year here, this first quarter, and then ramping it up as we got that breakout, looking at where's the value in silver. And it's like across the board. Look at that silver storm that we put out, a feature on. That's one of the smaller ones, more speculative. Do your own homework. We're not your financial advisors, information purposes only, but that stock's going to triple from here. And I just see it. And so, listen,
Not advice,
but that's from my viewpoint and for what I'm doing to buy it before it really even becomes a question mark. That's the thing. That's the way I view that one, because it's so cheap. And then, we had, another one was Silver Corp. That one has not yet been like an outstanding performer, but even companies like First Majestic, that's a very large, silver producer, but also has a big gold component. I saw before we jumped on this morning, they ended up coming out and they talked about their production for the quarter. The stock got whacked. I'm long a lot of that one. And so I started off adding those blue chip names. But you're right, the silver plays, they call it like the poor man's gold. They call it gold's wild cousin. There's all these different names for it. But silver will tend to outperform in the same direction, out or underperform in the same direction that gold goes. So these silver miners have been very beaten down. There's many more, even though it's a very small sector too, gold miners to choose from than silver, with both production and with exploration and development stage stuff. So if you could find some quality silver names, I think you're going to see some real interesting returns based on selecting the right ones. And silver's got a lot of upside. There's a lot of issues with this stuff being suppressed for a long time.
I mean, you can see that. I mean, when you look at, the gold miners charts, but the silver miners charts and silver, they're still only just breaking out of that downtrend. So obviously gold has broken out properly and is in, blue sky territory, but these other ones have still got, significantly higher prices in the past that have still got a breakthrough. So the potential for silver miners, gold miners, etc., is quite good if you think this has got legs. And I think, I guess the question is that given that we've seen these outflows from the ETFs, it feels like these central bank buyers, and I'm guessing these central bank buyers are super tank buyers, they're just going to carry on and carry on. So therefore, do we get the pullback that we all want? Or is it that because it looks like the primary buyer is not retail, it's not institutions, it's not the normal emotional characters, maybe the people waiting for the pullback in gold are going to be disappointed, because even we've seen higher rates, higher yields over the last 2 or 3 weeks, and gold making those new highs. So everything that should smack gold down, apart from those central bankers, has actually seen gold prices higher.
Maybe, I don't know, but I do know that, from like we've talked about many times, from a technical basis, I don't care what the asset class is, that break, quadruple top, all-time high, consolidating for years upon years, it just doesn't go up 5% and roll back over, you know what I mean, above those highs. You're going to see a 20, 30, 40% move from the breakout level. I think before, as a reasonably very conservative to reasonable target on sort of like the first 6 to 18 months after that happens. Now, do we see any pullbacks from right around here? I don't know. I mean, things seem very firm, and people are looking more and more for protection and store of value against the debasement of fiat currencies. But gold and the precious metals, and I'll include platinum in that. I'm actually going to be shopping for some platinum this week, which I think is very, very cheap compared to, is certainly historically to gold as well. These metals are going to be a haven of, not only real protection, but I think real returns, especially when you start to, leverage it over into the mining area, the stocks, the sector. Lots of opportunity and lots of value. So I don't know if gold is going to go, straight to 2,700 before we get a big pullback in US dollar terms, or if, say, we stall out here around between 24 and 2,500. Maybe 2,500 seems like a good number to give it a break. And then, we could have a couple of sharp pullbacks and, but I don't see it being, I don't know about you. What do you think? I mean, I don't see like more than a 10% sort of correction coming in over the course of a quarter or weeks or something.
It's one of those things, isn't it? I mean, kind of classic technical kind of price action would be to go and retest 2,100, but that's 300 points below here now, $300 below here, effectively. So it's quite a long way, and given the resilience, given the headwinds that I mentioned earlier, I guess if people were nervous, they could do what you've done sometimes, which is you go into those leaps, into longer dated calls. You go, okay, if you've been in, take some money off the table, buy some calls, so you've still got the exposure. It's what I always, it's the dullest trade on earth in many ways, but I always say if you've been lucky enough to be involved and you're sitting on some healthy profits and you're getting nervous, or you think the price looks extended, take some off, bank it, buy a call.
Yeah, the thing is I'm not nervous at all. I'm if there's a pullback to 2,200 or less, I got to believe that, the central banks first and foremost, but definitely a lot of the people that I know and that are under my, influence at the Gold Investment Letter, I'll be pounding the table to make sure you have your physical gold allocation that you want. We've had all these different things that normally would be a super headwind for gold and cause it to be very weak. The fact it's doing what it's doing in this environment, I think really likely speaks to the underlying strength and demand. So if we got 2,200, even 2,250, I'll start talking about, hey, I'll be featuring this to say to my people, I know a lot of you don't have the physical gold that you should. Even the gold believers don't have it. They're looking for the mining stocks to make themselves rich, to get out of, slugging away for a living. So I don't know. That's the thing. I have to get a better read. But I've been doing a lot of individual phone calls and Zooms with premium members that have been with the Gold Investment Letter since prior to 2016. So a lot of my, long-term loyalty folks, I've been offering one-on-one Zooms, and I've been doing this for 2 weeks, and I have more calls today and tomorrow, and just it's interesting getting the feel from people. Nobody owns a lot of gold, Roger.
Yeah. Is it, nobody owns it, but is the sentiment, is it, as we get in the comments, it's all baloney, this is bollocks. Yes, it might have come out, but it's going to go and roll back over. Is it, we've missed it and we're waiting for the pullback? What are people, or are people just sort of...
It's the lethargy. What we're going to need is a little more of a sustained move on gold. Like gold above 3,000, you're going to get all the retail piling in, and it's going to be in the headlines again. But it's not the right time or the right way to be buying gold. The physical part of it. So I don't know. This thing got so beaten down. If people have exposure to mining stocks that have gotten destroyed, that's affected their worldview and psyche on the actual metals. And I think that's been drowned out. So for that to come back to life, we're going to need more activity.
It sounds like you feel there's a bit more to go in gold, but the real juice here is that we haven't seen yet the real engagement. Only a handful have really engaged on the actual mining side. And even then, they look really engaged on maybe a 1 or 2 year view. But when you go back 10 years, these are still at the very bottom of that downtrend. So if there is any, I would say, valuation story here, and if there is any kind of reconnection between gold price and these things, that's probably where the juice lies.
Miners and mining stock and metals is the cheapest with the most upside sector that I see anywhere. Period. Hands down. And one of the things that's very important to make a distinction from 3 months ago, Roger, is we're seeing bids come in at that lowest end of the market that I've always talked about. Just in the last few weeks, all of a sudden, little tiny 3-cent stocks with $4 million market caps have been doubling on volume. And it's actually not me myself buying it, which has been the case for a long time, just chipping away and keeping these things afloat. There's outside capital that's coming in. It's starting to make its way. We're seeing flashes of it down at the low end of the market. That's going to probably come and go a little bit with the way that the metals and the miners go up and down. But you look at that mid-tier. I mean, these have been monster moves. I would like to see a cool off in some of the names that we talked about, like McEwen and Equinox, because when you go up 60 to 90% in 5 weeks, it would be nice to see a little bit of a cool off. But that's happening, and that's happening on big volume. So I think anybody who's really paying attention or wants to keep an open mind, that's the thing. A lot of people watching this, you might, there's a lot of built-in disdain for this area. But let me just remind everybody, there's no microphone, there's no computer, there's no energy, there's no nothing without these minerals and natural resources. Somebody's got to pull them out and have them available to make everything, okay? And so they're important.
I'm sure a lot of people who are watching this will be just starting their journeys in investing in this space. Hopefully next week we'll be talking about how you started in this space and how you got involved and some of the difficulties and trials and tribulations that you've had. So I'm looking forward to that.
Awesome. Thanks so much, Roger. I look forward to it too.